Yes, Benny. Good evening.
Yes.
Hi, Benny.
Good evening, Benny.
Hi, good to see you. I just have my dinner. You have your dinner?
Yes.
Okay. Let's start this week live trading. Anybody know what happened to the yen cross this afternoon? Oh my goodness! All money flow back to yen. Any know? I try to check the calendar, and I don't see any news. This today, even this week, I don't see there's any important news. Can you see my calendar? Right, Monday, nothing important, but the yen has benefit from all the inflow, right? It looks like there's a risk off. Tuesday, tomorrow, again, nothing important. We have some PPI from German, building permit from US, housing statistic from US, and that's it. Wednesday, again, nothing much. Right, Thursday, we have the ECB monetary policy statement. This is important. And on Wednesday, on Friday, we're going to have this PMI, a lot of PMI from Euro, from UK, also from this US. Right, these are important. So Friday, we're going to expect the price is going to like rojak again, right? But from today until then, I don't see there's significant news. Until Thursday, there's a ECB policy. Okay, so today I have no idea this afternoon what happened to the yen. Anyone know? Anybody have a did check on what happened to the yen cross? Nobody? Okay, this week, I mean today, not this week. Today, I don't see opportunity because other than we see the risk off, right? I think this is something that which I already cautions. I already make a lot of warning to the trading rooms and also the option class, right? I say that let's reduce our positions because something is not right, right? Now, why I say something is not right? If you take a look at the US 10Y, US 10-year yield, it has dropped from the high of 1.8, and continuously we see this US 10-year yield continue to fall. All right. Now, of course, this US 10-year yield has a direct link to what is the expectation of the future interest rate. Okay. So with the falling of the US 10-year yield, basically is telling us that unlikely we are going to see any interest rate hike anytime soon, or rather the market is not pricing any interest rate hike, right? So that's why we see the yield falling. But on the other hand, we have read a lot of reports saying that inflation is rising, right? Because especially after last week, we see a lot of economic reports come out from US, the inflation reports, the PPI reports. All these reports, it shows that it beat the expectations and inflation is rising. And if we base on 10 years ago or 20 years ago at the kind of the way they measure the inflations in US, by today's standard, the US inflation would have reached 5 to 6%. It's not just 2%, right? It's just that along the way, the Fed have keep changing the way they calculate these inflations. Okay. So a lot of talk have been about inflation is rising because after they see the economic report come out is better than expectations, right? So if the inflation is rising and is going to some analysis even talk about hyperinflations, all right? So if that kind of situation, then we should expect Federal Reserve to increase interest rate, right? Sooner than what they promised, which is 20223. But in the last how you call it, Fed chairman testified in the government to the government, he appeared to be dovish, right? He said, well, this inflation is just temporary, right? And it should go away because it's only certain the price increase is only limited to certain product. Okay, so that's what he said. Okay, now, so there are two school of thought here. Now, one school of thought say that inflation is coming, right? Expect higher interest rate, right? So the other school of thought is, well, they say if inflation is coming, what the heck happened to the commodity? I see the copper is falling, right? What's going on, right? I see oil, gold is falling. I see raw material is falling, right? So another school of thought is thinking that, well, there's no inflation. It's in fact, they advocate deflations. The reason for that is they say that, well, the government has spent out, give out free money. So the consumer have take the free money and go and spend it, right? They go and spend it. And because of the pandemic, a lot of what the customer can spend is only on the goods. They cannot spend on the service because restaurant closed, holiday tour closed, everything closed, right? So the only thing you can spend is goods, no service, just goods. So what the consumer, after they receive the money from the government, they spend a lot of money on goods. So what happened was the supplier got caught and there are shortage of food, right? There are shortage of goods, right? Because suddenly there's a surge of demand. And as far as the consumer is concerned, they have extra money in the pocket, but they don't know how to spend because they cannot spend on service. They can only spend on goods. So most of the money go to goods, right? And the supplier take it that is the indications that demand is keep coming. So they have ordered a lot to their supplier, right? So much so right now, after we see the vaccine have already carried out right across US. I think there are quite a high percentage of population over there is already vaccinated, and that's why we see that all the activities, all the sport event, right? They all attend and go and watch all the game without any mask. Basically, their economy has opened up, right? So now what happened is the consumer, instead of spending a lot of things on goods right now, they start to spend their money on services. Okay. And since they already purchased the goods during the pandemic, right now is the supplier got a lot of order to their supplier, and now they have to cancel their order because they suddenly realize that the demand is not coming. Right? Now, just like if you go to a local how you call it supermarket. Now, during the initial state of pandemic, you can see that supermarket, all the shelf almost empty, right? But today, go back to the supermarket again, it's all fully filled up. All the shelf fully filled up because supplier already have the time to replenish. And not only they replenish, they order extra more, right? That getting ready for the follow-up demand, which the demand never come. So what happened was the supplier cancel a lot of order. They cancel a lot of order, right? And what happened right now is commodity price drop. Okay, so that's why the second school of thought is thinking that we are expecting a deflation, not inflations, because there should not be an inflation because this is just basically caused by this crisis. Okay, so again, there are two schools of thought. It's difficult to say which one is correct, right? But basically, we can say that something is wrong, right? Now we see that if there's an inflation, how can the yield keep falling, right? How can the bond price keep going up, right? If we take a look at the bond price, US 10-year, look at this. it has been vertical up, right? Where the bond is going, I think the bond is going to where? Going to here. Here. Fill this gap. See? We are only halfway. The bond is going to fill this gap. Okay. So bond is going up. Now, with the current low interest rate, what the heck the bank investor put their money in bond for what? They earn peanuts, right? So why the money flow into bond? Big question. Okay. So we know that people, or rather investor, will start moving their money into bond for safety reason. For safety. Okay. So we have no idea, right? Why why these investors suddenly move the price into bond, right? Because maybe they see their stock market is getting too high. Maybe they expect some kind of corrections, right? And that's why they start to put their money into bond for safety purpose. Okay, and that's why we see the bond price start to go up. Okay, so the yield goes down. The yields go down. Okay, so so now we go into so this is the current situation right now. So if I see the big institutions are moving the money into bond for safety reason, then I want to take a look at the VIX. I pay special attention on VIX since last week, right? Take a look at the VIX. Well, the VIX was very low. Last week is about 14, 15. But what happened? We go to 1 hour. That was last week, 14 to 15. And see what happened? Only today, we see the VIX start to rally as high as 18. Okay. So when the VIX want to go, it go very, very fast. Okay. So basically, when we see the VIX start to spike, it basically telling us that the investors are not willing to take too much of risk. And that's also be one of the reasons we see today, this afternoon, the money flow back into yen. Okay, so what after see all this, my intention is to look for a risk off opportunity. Risk off opportunity. Now, before we look for risk off opportunity, all right, I want to take a look at the dollar index first. Now we all know that yen is a safe haven currency. Swiss franc is a safe haven currency. Dollar is a safe haven status because of the only reserve currency. Gold is a safe haven asset. Bond. Okay. So during risk off, all this currency and all this asset class is going to benefit from the inflow of capital of fund, right? So we should expect all this to go higher. Okay. And what the currency that's going down could be GBP or other currency, Euro, right? And of course, Australia, New Zealand, and Canada. Okay, so we are looking to opportunity to sell all this and buy all this. Okay, now let's take a look at the dollar index. If you have any questions, just type it in, yeah? Now, if you still remember last week, every week when we start our analysis, I always like to start from dollar index. And that is my analysis, right? Dollar index, I mentioned, I say that many times. I expect dollar index to continue to move higher. The target is 93.40. Okay, it has already filled this gap, so we can erase this gap. So the next target right now is 93.40. Right? We might see the price pull back, but ultimately, I think that is the target. We might see the price pull back, but it's going back up again. Right? So we have this general direction of the dollar index. It means that we will expect the rest of the pair like EU, GU, right, AU, NU, right, or UC, all this is going down, except the UC is going up, okay, because dollar index is going up, okay. So this at least give us a framework how we can proceed with looking for opportunity, okay. So first of all, we are looking for risk off. Second, we are looking for dollar strength. You can see this bullish bar very, very strong. All right. So I think that we will hit 94, 93.40 very soon, and then we see a price start to pull back. Okay, this can happen this week because now it's already trading in 93. It's another 40 pips. Okay, now if you want to trade dollar index, there's one currency that you can trade mimic is dollar, Singapore dollar, right? This one they are moving very closely. This currency, dollar, Singapore dollar, basically mimic the dollar index, right? So we know that potentially a dollar index is moving up to 93.40. So it looks like dollar index is going for this high or this high. Okay, so let's go to the weekly time frame. Like I said, today I don't have any opportunity here. I don't see anything that is convincing enough. But you can always, if you see something, you can always share. We'll take a look at it. Okay, so I think the price is likely to go to this area, this high, 1.3797. So if you round it out, it's about 1.37, 1.38. All right, I think this dollar, Singapore dollar, is going for 1.38. All right, so this could be the next target. Okay. So now after I know the buyers, so what I do is I do my this top-down analysis. Right, I look at the daily time frame. Obviously, we can see that it is uptrend. It is uptrend. All right, we look at the weekly. Obviously, it's uptrend. We look at the 4 hourly. It is uptrend. While we look at the 1 hour, again, it is uptrend. Okay, so if we are all in the uptrend, then we are looking to buy because we know that the target is 1.4. Sorry, 1.38. 1.38. I don't say 1.4. Just round it up. 1.38. So just put it 1.38. 1.38. Round number. Okay. So there's a quite huge move towards the target. So we can always look for a potential long, but after see the price having this kind of parabolic movement, it's very risky for us to go long, right? It's very risky. So we are not going long. We are not going to chase after this. Let's wait for price to pull back. Okay. So now let's identify our range, our 1 hour range. We can see the current high is here. Okay. The price make a high. It take out this high. Can you see? It take out this high. Okay. The price took out this high and make a higher high. Okay. So I want to know where is the origin that break this high, right? Of course, the origin that break that high is this. Okay, that is the origin that break the high for the 1 hour high. So now, if I'm looking for long, where should I go long? Right? If I take a look at this high and the low, and okay, the area I want to go long is only when the price comes down to the green area, green zone area. Okay, so for the time being, nothing to do. There's nothing to do. Okay, how about 4 hourly? For hourly, we can see price low is here. This is the low. Sorry, take the high first. The high. Where is the break again? Where is the break? The break is this. Where is the break that break this high? Well, sorry, not the break. Where is the origin that break this high? The origin, well, is here. So we draw a line there. Here, right? So this is a 4-hour. We have a 1 hour. We have the 4-hour. Okay, 4-hour range. 1 hour and 4 hours share the top range, but this is a 4-hour range, right? So if you trade off the 4-hour, then obviously, where is the low? The low is the 1 hour low, right? So you might want to wait for price to, it depends what time frame you are trading again, right? It depends what time frame you are trading. If you say that, well, you are trading the 4-hour, then you might want to wait for price to come here, right? And wait for the reversal pattern, then before you go higher, you enter here. If you trade on the 4-hour, but if you are trading on off the 1 hour time frame, then you go down to 1 hour and pick your zone as well. Okay. So I think that this is a 50% range. I like this area. You can see this area, this CP demand. Okay. This CT demand is very near to the 1 hour low. And it is also at the 50% of the 4-hour time frame. Okay. So if I see the price coming down to this area, I'll be very keen to look for a long based on 1 hour time frame and take my trade there, right? And expect price to come here. Okay. So that's what I will do. This 4-hour demand. The 4-hour demand is what I will intend to go long if I see the price come down, right? So now if we go back to 1 hour again, which is this. Okay, so the area I've been looking to go long is this one. So which is this range, So as the price will, when the price, if I see the price start coming down, then of course I will go down to the lower time frame. Okay, 15 minutes or even 5 minutes. 15 minutes a bit too big, right? 5 minutes, then I can see the pattern I need to see. Okay, so if the price comes now, you can see we see there's a gap here. If we go down to 5 minutes, we can see that there is a gap. See this gap here? Okay, and we see there's a gap here. And this is an area I'm looking to go long. But when I say this area I'm going long, but if the price come to this area, and then they give me the pattern I need to see, do I go long? No, yes, of course, because this is already below 50% of the 1 hour time frame, right? This is the high, this is the low. So if the price can come down to fill this gap, I think it's and give me the pattern I need to see, the accumulations and breakout of accumulations, right? Then I'll go long as well. But ideally, I would like to see the price come to this area and give me the accumulation and break the accumulations, then I go long. Okay, that's what I have for the dollar sing, right? So the other thing is we are looking for a risk-off trade, a risk-off. So it means to say that you should look for any yen cross, right? It can be the Aussie yen, New Zealand yen, pound yen, right? And look for sell. Okay, it is risk off. So if we take a look at the Aussie yen, let's take a look Aussie yen. Oh, so bearish. Look at the candle, right? That's why I say that with this kind of movement, basically everything all wash out already. There's no opportunity because this market basically moves so fast, right? And if we're going to sell, we will have to wait for price to come back. But price already leave the stations, right? Anyway, we see the Aussie yen. We have distribution. You can see that this is a distribution. I think this last week I also mentioned that this is the preliminary support, right? Price hold and the price break, price pullback. I'm not sure if you get in here, that should be your entry for short, right? And the price start moving lower. So now, of course, we don't expect the price to continue to go down, lower down, no, right? Because there's no important news. This is not the news driven, right? I don't see any news that move this price. So I think the price is likely to move back up. And you can see also the price already arrived this previous accumulation area. Previous. So what I meant is previously the bank was accumulating at this area. Previously, they accumulate at this area before they break out higher. So in other words, they long here. They have a lot of long start from here, and the price go higher. Now, if the price come back down, and if they are not taking their profit yet, and if price come back down, those institutions who long here would like to defend their positions. So if we are going to see some kind of a bounce, right? This is likely to be the place that we are going to see a bounce before it go even lower. If the risk off continue, okay. So what I will do, I think definitely will not happen tonight. Remember, this is a daily time frame, right? So what I will be looking at for this opportunity is I expect the price to bounce off from the previous consolidations, bouncing off, right? And once it bounces off, then I'll be looking for a sell trade and take the profit here and keep some for it to go lower. Okay, so that is my plan to trade the risk off. If we go to the 1 hour time frame, okay, go to 1 hour time frame. Basically, we have no trade, right? We are not going to chase after the trade unless the price start to pull back. Go to 4 hour. You can see we have a break of this low, right? Now, where is the origin that break this low? This one. This is the origin that break the low. Now, the current low is here. So we have established our 4 hour range. So again, if you trade off the 4 hour, you know that there's no business for you to sell here unless you want to buy, right? Here is low. Here is high. So if you are looking to sell because of the risk off, you would like to wait for price to pull back at least to this CP supply. And once the price come here, you wait for your distributions, right? Break, pull back, and then you take a short. Like this in a lower time frame. And take a profit at whatever low that they had previously. Okay. So that again is the plan for me to trade if I look for a trade on Aussie yen. Any question? This is a 4 hour range, right? So now if you want to trade 1 hour, the same thing, right? You go to 1 hour time frame. You can see the break is here, right? But we have a break here. See, we have a break here. In a 1 hour time frame, we see there's a break of low, this one. Okay, and the price make a lower low. So in a 1 hour time frame, what is the range? This is the range. Okay, this is the range. What here? So if you trade, look for 1 hour time frame to sell, we can always wait for price to pull back. And pull back to where? Pull back to at least 50% above. Otherwise, you are selling too low, right? So you might want to wait for price to pull back. Now, if we wait for price to pull back, let's examine where is a potential area where price might pull back. Look at this. We have a gap. not yet filled. All right. So I think that this is a very good area, 8100. If the price can come to this area, you might want to look for a sell, because I think that this is a gap. It's going to pull the price towards it to fill it before the price go lower. So this will be the area 81, right, to about 81.25. So when the price come near to 81, you go down to a lower time frame. You see, we also have a gap here, right? As we go lower, you can see we see more gaps. There's another gap. There's another gap. Many gaps. Not filled. Another gap. See, because the price just simply moved too fast. Okay, so now we have one gap, two gap, three gap, four gap. This one is perfect, no gap. See, low and high match, no gap. Right. So obviously we are not going to go look for short at this. No, too low. This one, no, too low. This one, yes, and this one, yes. So what we can do is we can combine these two as one single zone and wait for price to move higher. And once the price move to this area, we look for the distribution, a break of the trading range, and then it's look to sell, stop loss above. Target here. Okay. So that's Aussie yen. If you trade based on 1 hour time frame. So I give you 2 time frame, right? Because there are some trader prefer not to trade that short time frame. They want to trade higher time frame. Then you can look at the 4 hour time frame. But if you say, oh, well, I want to trade something that is going to happen very, very soon, then you go down to a lower time frame, like 1 hour time frame. Right? If the price is going to pull back, then of course you're going to see some opportunity in the 1 hour time frame. So these two zones are too low. Let's remove it. So this is the zone that we are interested. We can combine that as one. Okay, that's the zone. All right. Question? Any question on this? Yeah, gap. Yeah. That's now some of you might be saying, well, Benny, how about we look for long? Sure, you can look for long, but remember this is downtrend, right? And we are in the risk off. All right. So if you go for long, right, again you are fighting against the tide, the current, right? Not easy. Okay, let's take a look at dollar yen. Now, where the dollar yen is going, let's do a top-down analysis. We see this move lower to here, right? This move is basically intentionally is to stop out all this, to get rid of all the stop loss. Okay, before the bank want to move the price higher. Okay, so this is a very bullish move. Even though we see a down candle, but price after that, after stop hunting, we see a price start to move higher. See the price move higher, almost to the same high. Okay. This one. Almost to the same high. Right. So it attract a lot of buyer comes in. And at the same time, this move higher, not only attract the buyers comes in, you also relieve this trap order. Look at this. ERC up, right? To stop out all this. So this is a trap order. So price move up, unlock the trap order. So the objective have achieved. Then what we see is the price start to move back lower to fill this gap. Okay. And also on the way up, there are those buyers who at the set sideline now they come in to buy because they see this breakout and their stop loss is below this. So now the bank is hunting for their stop loss. Okay. See? The bank is hunting for stop loss. At the same time, they're hunting on top as well. They're hunting both sides. So look at this. This is a very, very obvious trap order. This one. Look at this. Look at the ERC go up to stop this. Price came back eventually, right? To relieve the stop order, and this one as well, right? This high, this one as well. So this is no longer trap order. So let's remove it. So the next trap order is this one. This one. Okay. Let's see whether the price came back already. Again, came back already, right? So again, there's no more trap order. We can remove it because the price came back. Now we see the price make a higher high, higher high, higher high, this, and make a double top. Can you see this two candle? It's a double top, and the price move higher to stop out this, to stop out this, at the same time to unlock the trap order. And now after they unlock the trap order, itself become a trap order, right? So this is going to be, price is going to come back down up before it go down. Okay, so I'll be looking for a short if the price come up here and take profit here. Okay, I think the price will come here. Let's hopefully tonight we see the price spike up. I will take a short there. After I see, I will not just put a sell limit there, right? Again, the same thing. When the price move up to this area, I'll go down to lower time frame and look for a distribution pattern or look for the 1, 2, 3 break, and then take a short. Okay, so I think that's my plan because this is a risk off, right? Between dollar and yen, which one is safer? Of course, yen is safer. So we are going to see this pair is going down, risk off. Okay, so I surprise come back, perfect, come back, take profit here. I think the price is going to take out all these stop loss. It's going to take out the stop loss, at least to this, at least minimum. See, these are, again, I say that many times again and again, these are specially engineered by the bank when they start moving higher. Look at all this, right? They give the impression that it's a very strong trend line. So a lot of people start to put in their buy order, their stop loss below the swing low. Now the bank, after relieve the stop, the lock or the trap order here, right, in this high, now it's coming back down to take out all these stop loss. I think this is the only potential trade I can see that have a very good high odds. Of course, provided it happen, it means that provided the price go higher. Again, remember this is a daily time frame, right? This is a daily time frame. So we go down, once we identify this, right? We go do a lower time frame, 1 hour. Look at this, this trade order. This is the trade order I'm looking at for the price to come up here, right? Here another trade order. So potentially this is the area. For the price go up here, I think it's kind of difficult, right, for tonight to test this high. But for the price to move up to test this high or even this is possible, right? It's possible. Let's see what happens. So what I will do is, if the price move up to this area, I'll look for opportunity to short. Now, where to take my profit? Okay, let's see our potential risk reward for this. We're going to take a short if the price come up to this area to test this high and also unlock this trap order. Let's say take about here. Stop loss today. So I think the price is likely to come all the way down here. Okay, so this is the risk reward. 1:6. Okay, 1:6. Potential, of course, potential. Okay, so let's see what happened. I think this is only trade I can see, dollar yen. Any question? What do you mean anti-trend? Anti-trend trade. What time frame? You see, Rick, anti-trend or not, it depends on what time frame you are looking at, right? If you are looking at higher time frame, which is in a downtrend, then when you're trading again, then you say anti-trend. But if you are looking at smaller time frame, it might not be anti-trend. So it depends on what time frame you are looking at. Okay. Now, Robert, higher time frame is downtrend. Let's take a look. Higher time. When you say higher time frame, what time frame are you talking? What is your higher time frame? Because to some people who are scalper or intraday trader, their higher time frame is actually 1 hour, okay, or 4 hours. So what is your higher time frame? What is your higher time frame? Okay, daily. Let's take a look at daily. What is the trend on the daily? Downtrend or uptrend? Well, we see it's clear down, up. Okay, we have a down, up, and after that we stop. So here, difficult unless we get more data. If I get more data, let's go to weekly. Now, so again, like I said, it depends on what time frame. So if you look at this, well, it is uptrend, right? See the price make a high, a higher high. So this time frame is uptrend. Until here is uptrend. Okay. Now, and then when we look at this time frame, see what's the trend? Let's see. We have a down, up, nothing here. Okay, then we look at here. Let's look at here to here. Okay, what's the trend? The trend is down. If we look at this time frame, the trend is down. Okay, price continue make high, high, low. Now, let's go zoom in a little bit. Okay, this is what we see. So now, if we look on this time frame, we see the price make a high, a low, a high, a low, a high, a low, a high. This is the same low. This is the lower low, double bottom. Okay, let's assume this one. Okay, we are in a downtrend. Okay, we are in a downtrend. So this is the last lower high. The last lower high is this. And that's why you see the price is reacting to last lower high. So what is the next logical reaction? You can see that this red color is the downtrend. Okay, and let's don't say what time frame, weekly or daily, but we know that this time frame red color is downtrend. But when we take a look at this color, let's say I use a different color, green color. From here to here, let's use a green color. This green color is the lower time frame. Okay. And what's the trend on this lower time frame? Let's say it's a daily, just now that's weekly. Well, it is uptrend. So now, when we put this together, green is daily, red is weekly, and the price right now arrived the weekly last lower high, which is a supply, which is a trap order. That's why I don't think the price is going to continue up. I think the price is going to pull back, right? Test this on before I go higher again. Let's see what happens. Okay. So am I trading against the trend? Again, depend on what time frame you're looking at, right? The market doesn't have recognized doesn't have any time concept. Okay. Now, if I trade on this green, this amount of data, it is uptrend. Okay. Then if you are looking to sell, you can say that, well, you are trading against a trend. But then again, if I say that, well, I'm looking right now at this area. This is one straight line. So what happens if I look at this? It is an uptrend or downtrend? It's an uptrend, right? But what happened to the price? The price has already break this and make a lower high, lower low. So it is uptrend, but this higher low, the most higher low is taken out. See this one? This higher low taken out by this candle. Also, this also taken out by this candle here. So two higher low has been taken out. So we can say that this uptrend has now turned into a downtrend, bearish. Okay, you're now trading here. It's bearish. It used to be uptrend. Now the two lower high being taken out, right? We can say there's a shift of sentiment. Now it is a bearish sentiment, right? So now I go down even lower to 4 hour. So in the 4 hour, what is the trend? Well, if I'm an intraday trader, I'm trading this swing from here to here. So what is the trend? It is a downtrend. So I'm selling on the pullback to this high. I'm trading this. I'm not trading up against the trend because I only stay in this trend, this time frame. So for a short period, I only stay in the market for a short period of time. All right. Do I confuse you? Do you understand what I mean? Right. So it depends on what time frame you are looking at before. Then we can say that whether you are trading against a trend or not. You guys understand? Does it make sense to you guys? Huh? Okay.
Yeah, Benny, makes sense.
Okay. Now remember, the market don't understand what is time frame. They don't have this concept time frame. The market only have imbalance of demand and supply, right? That's all they understand. If you have too many buyer and no seller, they know that the price has to go higher. Or if they have too many seller, no buyer, then the price has to go down. They don't care about time, right? So we as a trader cannot just artificially fix our mind. I'm trading on a daily time frame or 4 hour time frame. You should look at the chart here. What time frame are you trading? Well, I'm trading this amount of data point, right? If I'm going to trade this data point here, well, I'm in the uptrend. But if I say, well, I only want to trade this data point here, because I'm very short time trader, I'm going to eat. If the price come up, take my order. That price come down the same night, I just in the market for a few hours, I'm out. All right. But if you are trading this amount of data, that means you are buying on this pullback. It means that if the price come back, right, you know that chances are you are not going to get the trade because you're looking for maybe a lower, because this is a high, this is a low, right? The current price is here. So you say, well, I'm looking for lower. Let's say example, I'm looking for this price to come here before I want to buy. So you know that for the price to come here, you are going to wait for, it's unlikely to happen tonight. It might happen tomorrow or day after tomorrow. Now, even you get into the trade, right? Then you say, oh, my target is going to be this high or even this high. It means that you will have to stay on the trade for a few days, right? Because you are trading this amount of data. And this is an uptrend. And you are buying on this pullback. Okay. But for what I'm saying right now is the trade I'm talking right now to sell, I'm only looking at this amount of data. So I'm looking for a sell, take a trade, price come back, I'm out. That's it, right? Provided the price come back. If the price don't come back, there's no trade. I mean, if the price don't go up there, then no trade. Okay, I think any other currency that you want to see, I think that's it I have for you, because like I say, I don't have any particular currency in mind today. I don't see anything. Yeah, hit and run. Yes, that's correct. Hit and run. So you, when you look at opportunity, right? Don't fix your mind on I'm looking at daily time frame, weekly time frame, 4-hour time frame, 1-hour time frame, right? You try to look at the market. Okay, what time frame? How much data am I talking here, right? Am I going to trade this? If I trade daily, if I go to daily, then I have a lot of more data point. I'm trading on the sell. You can see that I'm selling. I'm trading this red line, which is a downtrend. But if I trade on the green line, I'm trading on the uptrend. But if I trade on this line, let's say give a different color, blue. So now I give you three time frame. The red line is a higher time frame. We don't know what time frame, but it's a higher time frame. It is a downtrend. So if it's a downtrend, where are you going to sell? You are going to sell here, which already happened, right? Already happened. You can wait for price to pull back and you sell. Now, if you trade, say, well, I trade on the green line, green trend, then you're looking for long. You're waiting for price to pull back lower to this area before you buy. Now, if I trade on even the blue trend, which is a downtrend, so now you can see that the blue trend is a downtrend, which is also in sync with the higher time frame, the red trend. All right. I hope this is not confusing you guys. Okay. Any currency? We have 6 minutes to go. Or any question? All right, good. Great. EU. What do you see on EU? I don't see anything on EU, no. I mean, at least not for tonight, right? But this week, possible, of course. Now, if you just compress the chart, all right, you see what happened, huh? I look at this, let's say, daily time frame. Now, what is the trend? Well, the trend is up, right? See, the trend is up. Okay, the trend is up, and now the market is looking at this. This is the previous consolidation, right? So we have a high here. After the breakout, we have a low. The price respond to this, and price make another high, but this time this is a lower high, lower than this high. Okay, and now if this is a lower high, I think that this will be taken out. I think that this will coming down, at least to respect this, and not this one, because this is a lower high, right? This is not validated. So I think that just based on this analysis, I think that potentially I'm expecting the euro to come even lower, to test this low, right? Before we go higher. So I'm looking at this here, and already we can see that there's some kind of accumulations. You can see the price is doing what? You can see this one. Price is constantly make a low, you make a high, make a lower low, they take out the low, take a stop loss, stop hunting, make a high, respect this high, right? Make another lower low to take out the low, stop hunting, make a high, respect this high, make another low to take out this low, respect the high. So what is the market doing right now? We are seeing that the bank consistently attacking the stop loss located at the swing low. So why they want to attack the swing low? Because the bank future is going up. All right. So the stop loss is if they don't take out all these stop loss. Sorry, I should put it the other way. Now, what kind of trader who place their stop loss below the swing low? The buyer, trader who buy, right? So they place their stop loss below. So that means like if the bank want to move the price up, they want to get rid of all these buyer first. So now what we see is the bank is starting only, not yet complete. That's why I say that I don't see opportunity. I can see right now on the daily time frame, the bank are starting to clear their house, right? So we might see the price do this, go up to induce buyer, right? Induce buyer breakout, and then buyer comes in, their stop loss below and below, then price come down again. We see another spring, then go up again, come down again, then go up again, another shake out. Then we see the price breakout. See, a breakout trading range. So this is a trading range. We can expect a lot of stop hunting because the bank are accumulating and also they are doing stop hunting to get rid of all the early buyer, and their target is here. So be patient. I can only say that be patient, wait for the break of the trend before we jump in, because when it is in the attacking mode, right, it is very, very difficult to trade, because when the bank is on the stop hunting mode, they can hunting on the stop loss below and the high both at the same time. Okay, so the best scenario is wait for it to finish and wait for it to break the trending range. Once it break, when the price start to pull back, that is the time you get in. That will be a safer trade. Okay, so that's why I see on you. That's why I don't see any opportunity on that. Okay. Okay, one more trade. One more pair. Pound cat. Let's take a look. Pound cat. Do we have any position on pound cat? What do you see on pound cat? You are looking to sell. Okay, let's let's see. If you compress the chart, it is basically in the long consolidation. Can you see that? Right? We see a lot of consolidation. It means that we are going to see a lot of stop hunting. You can see the price here, the same thing what we see on the euro, right? The euro just now what I show you is only happened to this part only. So so much not yet happened. Okay, so that's why I say I don't see. So after the price take out all the swing low, the stop loss, it go up, right? Thinking the price is going to break out, it take out the stop loss here, and the buyer comes in, their stop loss below, price come down again, stop out all this, right? And then price goes up again, stop out, come back again. Okay, so now we can see the price is constantly doing stop hunting. They create the high, move higher, stop out, move higher, stop out, move lower, stop out, right? So we are in the trading range. In this amount of data, we are in the range. So now if you say that you are looking to sell, then I suppose you are looking for this over here, this amount of data, right? So let's take a look. Go to 4 hour. Okay, in the 4 hour, we see this downtrend, price coming back to the last lower high, right? So we can look for a short here if you are trading off this time frame, right? If you are trading off this time frame. But if you are trading on a lower time frame than this, then you are in an uptrend. See this? Okay, you are in an uptrend. So depends again what you are looking at, right? But of course, higher time frame will have an override, more important, especially this come from the higher time frame as a supply, as a trap order. So this is a lower time frame uptrend. So chances are this lower time frame uptrend is going to give in to this higher time frame downtrend, right? So we can look for a sell. We can look for a sell. Okay, when go down to lower time frame, 1 hour. So what do you see on 1 hour? Right, we see a buying climax. Right, this is like wow. The distribution start from here, isn't it? Yeah, the distribution start from here. This is the preliminary support, buying climax, automatic reactions, and then we see a lot of upthrust, right? And then Utah is the last one, right? So very good for look for a short, right? That's a Utah. So now after Utah, so this is the range. Okay. Now, if you sell right now, where do you plan to sell? Right, it is still uptrend. You can see that even you are trading this low time frame, you take out this high. This is uptrend, right? You are selling is very risky. Where you intend to sell? No, because if you think a double top, what the price might do is the price come up here, you think it's double top, price pull back, make another higher high, right? So it is uptrend, right? So you trade this double top, you are trading on patterns, because price can just come and make a double top, and you trigger a sell limit, right? And then price pull back a little bit, then price could go up again. We are in an uptrend, continue uptrend, right? So if you want to sell, you need to wait. I will wait for the last point of supply. Okay, the price meaning make a high, a lower high, right? The best is you take out this first. The price need to take out this, then come up. That's where I will sell. Because if the price did not take out this low, the price might just come to this area and then go higher again. Unless you sell somewhere here and you take a profit here, then you are trading in the range here. But if you expect price to fall, you need to much lower. You need this one to be taken out first, because now you are trading this range. This is a high, this is a low, this is the range. All right. So if you want to sell, you can always wait for price come up, go down to a lower time frame, and take your profit here, because the price might just come here and then go bounce up, right? So take a profit here, then you are trading, then you are okay if you want to do that, right? So again, I would suggest that you go down to a lower time frame if you want to sell the double top, right? So when you go down to a lower time frame, let's say example 5 minute time frame. So what you're going to see this, you want to see price come up, right? It shows you a double top, but don't sell yet, right? Wait for what? Wait for another distribution in a smaller time frame, and price break. If the price break, price pull back, you sell. Put your stop loss above. Okay, take profit here and then another profit here. Again, the idea is you want to wait for another distribution in a lower time frame before you pull the trigger. Don't just put the sell limit and trade this double top. It's very risky, because price can just come and take your sell limit and continue go higher. So you want the price to come up here, give you a distribution in lower time frame, break the smaller time frame distribution, break the trend, pull back, then you sell. Is it clear? Okay.
Hi, Benny.
Yes.
Okay, I have a question.
Yeah.
Actually, I'm looking into this Euro JPY, Euro GBP, and as well correlating with this GBP Japan as well. I found out that it has reached the supply zone on H1 for Euro GBP. So is it possible for us to take a simultaneous trade on Euro GBP and as well as GBP Japan?
Euro GBP.
GBP, yeah.
Try not to trade the correlated pair outside, because if you trade the correlated pair, if you are right, of course, very happy lah. You are double reward. But if you are wrong, it means you are taking a lot of risk. Both will be losing trade. just trade one, especially if they're correlated.
Okay.
Oh, yeah. Okay. All right. So no question. We'll end here, and I'll see you again you guys next week. All right. I don't think that tonight there's any trade, but you might see a trade. If you see a trade, please post in the group so we can all take trade all together. Okay. Welcome. Bye. Bye for
Thanks,
now.
Benny.